Hi everyone, welcome back to our channel and today we are decoding one of the most important signals coming out of the global markets right now. One of the surface the storybooks confusing Bitcoin is climbing, gold is holding strong yet VTI crude oil is struggling to gain traction. But this is not random market noise, this is a clear sign of a major economic divergence and understanding this divergence could be the key of to your tax smart move as an investor. Let's begin with the gold and bitcoins. Both are linked together as modern safe haven assets. Why now? The answer comes down to powerful drivers, geopolitical uncertainty, and currency devaluation. In times of global instabilities, investors seek protections outside the traditional banking system. Gold has always been the timeless hedges, but today Bitcoin is being treated has its digital counterpart. As virgin assets beyond government control, increasingly viewed as a shield against inflation and the erosion of trust in flat currencies. This rally is not purely about speculation, it's about fear searching for safety. Now let's construct that with oil. Historically, geopolitical tensions pushes oil higher, yet right now crude prices are falling. That tells us the dominant market fear is not worries, it's slowing global economic growth. Oil is the lifeblood of the economy. When factories produces less, when shipping slows, when consumers cut back, demand for oil drops and prices reflect in it immediately. Weak data from China and Europe is reinforcing this narrative of lower demands and that fear is so strong it's overriding the usual risk premium that Confield would normally inject into oil markets. So what we are seeing in a clash of two powerful narratives, the safe haven narrative fear of systematic collapse is driving investors into gold and bitcoins. The recession's narrative fear of slowing growth is pushing oil lower. The question for you as an investor is simple: which narrative will dominate? Here's your white list to answer that. Number one, the US dollar. If the dollar strengthens while gold also stays strong, that's a red alert signal of deep market stress. Number two, key inflation and GDP reports positive surprise could lift oil prices sharply while cooling safe haven flows. The number three, the Federal Reserve store. The moment the Fed signals reverse cut, we could see a powerful liquidity surge that lift Bitcoin, gold, and even oil together. This divergence is not confusion, it's a roadmap. It shows as the battlefield between fear of the systematic collapse and the fear of economic slowdowns. By reading these signals in combination, you can position yourself not for what has already happened, but for what's coming next. So let me know in the comments. Do you believe the safe haven trade in the right call or in the recessions one is the dominant force? If you find this analysis valuable, don't forget to like the video, subscribe for more professional market insight, and join the conversation below. Thanks for watching.